Free. Hello, it's Jessica Plamondon with Royal LePage Atlantic and the Pike Group. And I am here with my good friend and colleague, Leanne Myles. I often refer to her as my mortgage wizard because she is so helpful. She has helped so many people with, unique and interesting situations. So I've been getting a lot of questions about mortgages, and I wanted to bring in the expert on mortgages. Welcome, Leanne.
Hey, thank you.
Awesome. All right, so let's get to it. So I've got kind of a list of questions that people have been asking me that if it's all right, I'm just going to kind of roll through them.
Absolutely.
Right
Absolutely.
on. Okay, what will I have to pay when I sell?
When you're selling a home, potentially if you're doing it before the contract is up, you will have a penalty. You'll also have a discharge fee that you'll need to pay. So depending on the type of mortgage that you were placed in when you got your home, those are two main factors that you need to look at. If it's a fixed rate mortgage, that can be something that you need to check into long before you list your home because it can be cost prohibitive to get out of. If you're in a variable rate mortgage, always rule of thumb is it's 3 months interest. So if you have your amortization schedule handy, you can actually see exactly how much it's going to cost you to exit the current mortgage.
Wow. Okay. Wonderful. How much will I need to put down when I buy?
So all owner occupied properties are always 5% down. That's all you're required to put down. People think that because they've owned a home before that they have to put 20% down. If you're going to live in a home, 5% down is the rule of thumb. You can always live in a house and do it that way. That also gets you best rates.
Awesome. And what if it is a second property?
If it's a second property, depending on who's living there. So if you're buying a second property, maybe you're buying a house down by Dalhousie because your child is going to go to school there, and it's only going to be that person in the property, that's a second home. That can be 5% down as well. If you're planning to rent out a second property, totally different scenario. 20% down required if you're going to rent it out.
All right. Awesome. And how much are closing costs?
Closing costs, I tell my clients as a rule of thumb, is 2% of purchase price. 1.5% of that is for deed transfer taxes. In Halifax, Windsor, where I live, it's all the same, 1.5% deed transfer. And then the other 0.5% would cover, say, your legal fees, cost to register the mortgage, that kind of thing that you're going to need in the end. 2% is a really, really good rule. It actually gives you a bit of a buffer as well.
That's a great rule of thumb. Thank you. How do I find a good real estate lawyer?
Oh, okay. So your realtor will often have access to fantastic real estate lawyers. And it's important to use a real estate lawyer. You can really change the happiness of a deal with a lawyer that maybe is doing family law and is a family friend and is going to close your deal for you. Maybe they don't know about migrations or whatever. We also, as brokers, we work with different lawyers in town, and we'll recommend 3, solely a realtor. And oftentimes, I think the realtor is the one that, because you're getting the contract ready and you need to have it reviewed,
Yep.
They're going to point you in the right direction.
For sure. And I know that I have a trusted realtor that I work with. I know that the job gets done efficiently. And you're right. I've had other lawyers where they were very good at their jobs, but it changed the happiness of the transaction because they weren't trained in real estate law.
Yeah, it can really significantly, it can really impact the closing significantly. And not that a lawyer can't do it. I can do commercial real estate. Should I do it? Absolutely not. It's not my forte. It's not something that I dabble in every day. So right. It's giving your deal to somebody that does it day in and day out. It just makes the experience more pleasant.
Yeah, right on. Okay. What is a statement of adjustments?
Okay. So when you're buying a house, depending on if you're selling as well as buying. So let's just say you're selling your home in Fall River and you're planning to buy in downtown Halifax. Mm-hmm. A statement of adjustments is, it shows us what the house sold for. It shows us that the realtor's been paid, and it shows us the equity. And oftentimes we use the statement of adjustments to prove down payment. So, you can think that you only owe $300,000 on your house and you're selling it for $5, but maybe it came in at $330,000. Maybe you were off a little bit. So the statement of adjustments is something that as brokers, we often get on the sale of a property before you're buying the next property. It's due diligence to make sure that you have enough money, and so that you don't think that you're that you have more than what you actually do.
Excellent advice. Will I have to pay GST or HST on my purchase? I guess HST here.
Okay. HST in Nova Scotia. On a residential property, it's not over and above the price. I've seen some purchase agreements with new construction. You'll see the HST as a line item. The total price is what we look at. We don't look at the HST or anything like that. If you're buying commercial property, totally different. And if you're selling commercial property, totally different. But residential real estate typically does not, if there's HST, it's included in the purchase price.
All right, wicked. What is CMHC Insurance?
Okay, so I don't know if many people know this, but back in the 70s, when our parents were buying homes, I know my parents, I think, bought in like 1969, CMHC didn't exist. So when you were going to the bank to get a mortgage, you needed 20% down. What CMHC is a government organization, government corporation, that they will insure the mortgage so that if you don't pay your mortgage, the bank doesn't lose any money. So today we have the ability to put 5, 10, 15, 20% down, and it ensures that our bank that is lending you the money is not going to incur a loss if you default. It's what props up the Canadian economy. It's what protects our banks. It's a fabulous program. If you went through a hardship with CMHC, let's just say your spouse died or you lost a job or whatever, CMHC will help you pay your mortgage while you get that house on the market and get it sold. So it's a very, very, it's a lot of money. You put down 5% and you'll often see 4% go back out the door for CMHC fees, but it's what gets you in the door for the 5% in the first place. I mean, we're coming into a market where housing prices and the values are, $400,000. Like, who has $80,000 lying around to put down on a house today? It just doesn't happen. So it's a deal maker. CMHC helps make deals.
All right. What other fees will I have to pay?
Okay, so, and this could also be a realtor question. I always tell people you need to have money for inspections, appraisals. So inspections, I think they run from $400 to $700. Appraisals, same thing, $400 to $700. So those are some costs up front. We're actually seeing a little bit of appraisals being done before even somebody gets their deal approved and or accepted by a seller. So that's a new change in our market. And some of the other fees that you can have, so an oil tank. So let's just say you're selling your home and you've got a half a tank of oil. Well, you don't want to just leave that oil behind. So what they do is they have the homeowner top up the oil tank, and they have a receipt, and that's just an additional cost. So if you're buying the house for $300,000 and the oil tank is $900, you're actually going to pay $300,900 for that house. It's an adjustment to make sure that you get the oil, they confirm it, and then you buy it with the home. So inspection, your legal fees as well. Your legal fees, I would plan a minimum of $1,500 to $2,000, depending on the lawyer that you're using. Some will include different charges in their fees. Others will charge a certain amount and they'll break it down for you. So, just because you're getting a quote for $1,200 from one lawyer doesn't mean that it's equal to the guy that's charging $600. Because the guy that's charging $600 may end up at $1,500 with the extra fee.
Gotcha. And that is actually leading me into my next question. So what do I need to know about property taxes?
Property taxes are paid in advance. So this is something that comes up a lot, because when people buy their first home, the taxes are due and payable on the first tax go round. So what I tell people is have half your taxes also in your savings account. It's part of the 2% that I talk about for your closing costs. What that does is it ensures that when the first tax bill comes due, if you haven't had your mortgage long enough to build up a capital in your tax account, you want to be able to cover that shortfall. If you bought a house in August, your taxes in HRM are due in September and October. Well, you wouldn't have 6 months of built up payments to that. So come February, we get a lot of calls because people have gotten an adjustment on their taxes, because what happens is there's a shortfall. The lender will pay it, but they will catch up next month. So now you're paying a year and a half worth of taxes in 12 months. So they adjust your payment for you. So if you can have that money on hand and be prepared to pay that first tax bill yourself,
Mhm.
it will save you major headaches in the end.
Yeah, I always find, especially going into the summer months, working with first-time home buyers and explaining property taxes, I know that it doesn't really settle in because but until you buy your first house, your only experience with taxes is when you pay income tax, and that's at the end of the year. And most of us get rebates back, especially in our first home buying
Couple
year.
of years.
So
Yep.
it's kind of a mind shift that with property taxes we prepay.
We prepay.
We
And
prepay.
likewise, when you're buying a house and you're buying it within a certain period, there's a credit that goes back to the seller as well, because they've paid, if you buy in August, well, they're paid up until October. So now you have to adjust from August to October back to the seller because they paid it in advance. So it's all on the statement of accounts that you get from your lawyer, and they really know what they're doing and can make your transition very smooth.
Awesome. Right on. Okay, what mortgage options are best?
It depends on the client. So there is not one size fits all. I will tell you, I've been doing this business for 15 years now, and not one deal has been the same as the other. Everybody has a story. Everybody has a past. Everybody has different jobs, different types of income. Mortgages are based on the client. So when you come to a broker, we work for you, not the bank. When you go to a bank, they're just fitting you into their product. So that's an open-ended question where the mortgage is tailored to the client. A client that is an RCMP officer who is potentially going to be moved in 3 years shouldn't be placed in a fixed rate mortgage with a credit union. That would be like the wrong place for that deal. Likewise, if you placed him with a TD or a Scotiabank, they have rules around military RCMP where they can move penalty free. So there's a lot of factors that come into consideration when picking a mortgage.
Mhm. What are some of your favorite mortgage products?
So I'm a huge fan of the Manulife one. Manulife Bank, I used to work there, and it's a product that I use now for my investors when we're getting ready to help them do real estate investing. First-time home buyers, I love First National. They have a warranty as part of their mortgage, and the warranty protects my clients if the furnace breaks, if the heat pump breaks. I've seen them replace a Genair stove. It's absolutely, when you're a brand new first-time home buyer, having a major mechanical breakdown can make or break your cash flow. And having a lender that will just come up in behind and say, yeah, we'll fix that. Here's a check for $9,000. Let's get you a new furnace. Like it's absolutely incredible when you can do that. So First National has they have a higher requirement for different people and different areas. So depending on, the person, they are absolutely the best lender for a first-time home buyer.
Right on. Those are all really great products. We've had some
Yes.
very happy clients between those products.
Yes.
What is the difference between monthly and bi-weekly payments?
Okay, there's no difference between monthly and biweekly. It's just the frequency. The difference between monthly and accelerated biweekly is that you pay your mortgage off faster. Accelerated biweekly means that you're paying a little bit more than you would if you were just taking the 12-month payment and dividing it by 26. So you can do that. You can take your 12-month payment and you can pay it biweekly and not accelerate it. Likewise, you can also add to your payment and pay that biweekly for 26 weeks. It shaves off years off your mortgage. The rates that we're seeing now, it's absolutely incredible, the difference between the principal and the interest. And accelerated biweekly, you don't know what kind of market you're going to be in when your house comes up for renewal in 5 years. Paying it accelerated, it gives you a bit of a buffer to make sure that you're going to be okay in 5 years when you're shopping again.
Right. Okay, awesome. Can I port my mortgage to a new property?
You can port your mortgage to a new property if you're using a Schedule I bank, as well as if you are getting a mortgage for more than what you left. So if you were living in Halifax and you had a house for $300,000 and you were moving to Toronto and you're buying a house for $500,000, you can port that $300,000 over. We always look at to see if it's more beneficial for a person to pay the penalty and get a better rate. And if not, yes, we can port the mortgage. You should be dealing with somebody who is in the area where you're buying, not where you're leaving when you're doing that stuff, and just have your mortgage documents ready for them. Different lenders, credit union doesn't port mortgages. Credit union they're local to their area. Their mortgages aren't portable. Scotiabank, TD Bank, First Nat, all those mortgages are portable. Now, if you're RCMP and you're being posted to none of it, it's a potential that if you have a First Nat mortgage, that they're not going to go there. So, it's important to have big conversations around what you're doing and how you're doing it.
Okay. All right. And then something that I've actually come across quite a bit in the last couple of months with new Canadians with immigration into Nova Scotia, I'm getting questions about getting a mortgage for permanent residency versus can you speak towards that a little bit for me?
Okay, so if you're new to Canada, so there's different status. So there's work permits and then there's permanent resident. So if you're new to Canada and you're coming in on a work permit, so let's just say Irving's hired you and you're coming from the UK, we can use your former country's credit bureau and we can get you a house. I think it's 10% down that you need, and it has to come from your own resources. Your credit is obviously going to be very thin in Canada, but we can work around it because maybe you haven't had credit cards, but we can use your old credit bureau from the other country. Permanent residence, you're just like the rest of us. There is a little bit more leniency with there's a rule of thumb when you're buying a house, and if you're a first-time home buyer, 2 credit cards, 2 years for $2,000. When you're new to Canada, those rules are less stringent, and depending on your status can be overlooked, and we can go to another country's credit bureau to get it.
Okay. All right. I think that's about it on my end. Yeah. Thank you so much for your time. Again, Jessica Plamondon with Royal LePage Atlantic and the Pike Group, chatting with Leanne Myles, my mortgage wizard. Thank you so much for your time, Leanne.
You're welcome. Very happy to be here.
All right. Talk soon.